Hello, it's Castaway Trader, welcome back to my YouTube channel. Today's video is called NQ and ES Mini, how to kill this raging bull. And before we start this video, I would ask you to read that important disclaimer. Okay, this is how my website looks like. It's located at www.castawaytrader.com. You can see I'm running now great Christmas sale. You can save big on video courses, and later in this video I will talk more about special offers valid until December 31st, 2019. You may know that I have two subscription products. One product is regular updates and forecast I post on my website. This is how it looks like. I cover four main markets: US stock indices, crude oil and natural gas. I also watch the individual names in stocks, value stocks and momentum stocks, and I also closely watch gold, silver and gold miners. This is how crude oil and natural gas looks like, and this is how gold miners look like. The normal offer I have is that you can try that service for 15 days for only $39.99, and later on in this video I will show you how you can get a super long trial for $99.99, and after trial expires you will get additional savings. It's all about Christmas sale, and that Christmas sale will end on 31st December. Watch this video until the end and you will see how you can get that offer. In addition to updates I post on my website several times a day from 8 a.m. in the morning until 11 p.m. at night. You will be getting email notifications, so every time I post a chart with comments and forecast, you will always get email alert into your email box. And as I've mentioned, later in this video I will be talking about my Christmas offer. You can find it at www.castawaytrader/Christmas. This video is about two things. First, I will be talking about the Harmonic Elliott Wave theory. That is a simple rule-based forecasting tool that works for stocks, futures, options and cryptocurrencies. Second, I will show you how you can use a set of very simple rules to perform multi-time frame analysis that will improve accuracy of your analysis and your forecast. You may have read in many books that a trader should keep an eye on several time frames. But let's imagine they tell you use RSI or MACD indicators. So just open daily, weekly, hourly, 15-minute chart. So what you're gonna see that will be very different picture from one time frame to another one. So that methodology is great because it helps you to align analysis on different time frames, and you can just feed them together. They become like small pieces of a puzzle, and if you go from the top to the bottom you will get a full picture, and the lowest time frame would help you to pinpoint the tops and bottoms on a bigger time scale. I will show you how you can do it in this video. We always start from the 5-wave up fractal, and currently US equity markets are in that 5-wave up fractal, macro 5-wave up fractal that started at the lows of 2009. And I'm gonna show you in this video that we are about to complete the strongest part of the rally in wave 3 up. This is a monthly chart of S&P from 2009 until 2019, and you can see that we got one up, two down, and A up, B up, and we're about to complete subwave parenthesis C of wave parenthesis 3. And now we can zoom in and we can see that the second leg up in subwave parenthesis C of wave parenthesis 3 started in February 2016, and that subwave parenthesis C is supposed to be subdivided into 5 waves. We got 1 up, 2 down, 3 up, 4 down, and we are getting the final wave 5, which is subdivided into A up, B down, and C up. Now let's look at the model of that subwave parenthesis C of parenthesis 3. As I've mentioned before, it has to be subdivided into 5 waves. And what I noted that very often before the major top of subwave parenthesis C of wave parenthesis 3, before that top, there is one quick deep drop in wave 4 down or 1 degree lower. And that drop normally has an indiscernible structure. It looks like a one-leg wave down. And I believe the drop we got from September 2018 into the low of December 2018 was that minor drop before the final push structured as ABC in wave 5 up. And that final push, ABC push higher, should make that final major top in the market before a multi-year corrective wave parenthesis 4 down. I explain that pattern in depth in my professional video course, and now I run 33% discount. It's a part of my Christmas sale, which is valid until December 31st, 2019, and you can get the access to a bunch of videos, video lessons at only $104.99, and you pay only once for the lifetime, and I keep adding new lessons and new videos. If you only start learning the Harmonic Elliott Wave theory, I would strongly recommend you to start from another course, the course for beginners. And again, it's also a part of my Christmas sale. You pay only $69 for the lifetime access for the course. And again, that offer is only valid until December 31st, 2019. Now let's come back to that model. As I've mentioned, if that quick deep drop we got from September 2018 until December 2018 was a minor wave 4, we are left with the final ABC push higher, which would complete that subwave parenthesis C of a larger wave parenthesis 3 up. And let's look at the actual chart of S&P 500 daily chart covering 2019. I believe that was A of 5 followed by ABC of wave B of 5, and starting the beginning of August 2019, it's a typo here, sorry, we are in the very final subwave C of wave 5, which would complete that major wave parenthesis 3 up. And as any subwave C, that move up, which I highlighted in a yellow box, has to be subdivided into 5 microwaves. You can see I label those waves with lowercase letters. Now let's see what the final move would complete that rally. And this is subwave C of wave 5. I highlighted it in a yellow box. Now we're gonna see the microstructure of that specific move, because once that micro move gets completed, it will complete the whole rally. It would be the last nail into the casket of the bull rally. This is that yellow box. If we zoom it in, we will get another 5-wave up fractal, which has the very same structure as the major 5-wave up fractal, which is why I call the Harmonic Elliott Wave theory a simple tool. You don't need to learn too many fractals. You learn major fractals and you will be able to use the very same fractals on very different time frames. Now, let's look at that rally that started on August 5th, 2019. I believe that ES mini and NQ mini are somewhere here. We are completing a minor wave 3. You see that it is labeled in lowercase letters, and probably we are going to get a pullback in January, February in minor wave 4 down. And only then we would get the very final micro A up, B down, and C up, which would finally complete that major top of wave parenthesis 3 up. Now let's look at an actual chart of ES mini and NQ mini. This is the start of that last C of 5. It starts from the low made by B of 5. It's early August. We got 1 up, 2 down, A of 3, B of 3, and we are going to complete C of 3. And you can see that wave 4, that minor wave 4, has 2 targets. 3125 and 3070. Bear in mind, wave 4 has to have two legs. What's possible is that subwave A of 4 will hit the first target, then we would get quite a deep pullback and B of 4, and we would get the second leg down, which would probably get lower to tag target 2 around 3070, 3050. This is the path it may choose to follow. Again, this is a possible location, the current location of ES and NQ mini. And here I'm showing you an expected path for a corrective wave 4 down, and as I've just mentioned, it should normally have two legs. ABC of subwave A followed by ABC up in corrective subwave B up, and the final push down in subwave C of wave 4. I expect to get that corrective structure over the course of January and February 2020. If ES mini and NQ mini is somewhere here, it's not that accurate, right? We need to be able to make a more accurate prediction. That is why we would use the very same fractal, but we would zoom in even further. We would zoom in to see the microstructure of that final subwave C of wave 5 of a lower degree. And we expect to see a rally here, which is subdivided into 5 microwaves, and we would label them as lowercase 1, 2, 3, 4, and 5. Let's zoom in and we will see that structure. So we are going to see the structure of that rally, which started from here, and that would be the very final subwave C of wave 5 of a bigger C of 3. On 4-hour charts of NQ mini and ES mini, we can see that subwave C of 5 is big enough to be called a completed rally, and that ABC in wave 5 up looks very completed on both charts. This is NQ mini and this is ES mini, the very same story, A up, B down, and C up. And I made the chart on Thursday. On Friday it went even higher. Let's zoom in into that very last subwave C of wave 5, microwave 5, to see its own microstructure subdivided into 5 waves of a lower degree. And this is it. This is the low of a minor wave 4, and this is from where we should get A up, B down, C up, which would complete C of 3. And this is the previous important low for us, the low made by corrective wave B. And from here you see that yellow box I showed you on the model. This is that yellow box. Inside that yellow box we should get the very final micro 5 waves up. Look, ABC of 1, that could be counted as 2, that could be counted as A of 3, B of 3. Now, one could say that was C of 3, very shallow 4, and A up, B down, and C up of wave 5, the final wave 5. And that is a very possible scenario. That was a very possible scenario because that subwave C of 5 is big enough to be all of C of 5, and that ABC would have a very completed look, and that wave 5 made a higher high over the top made by 3. The only problem with that micro count is that shallow flat pullback is hardly could be counted as wave 4. In many cases, in majority of cases, wave 4 should retrace at least 23.6% of the preceding rally in wave 3. For example, if we measure the length covered by wave 3, microwave 3, from here, from the top of wave 2 down, up to here, let's say this is the top of wave 3 or right here, that would be all of wave 4. You cannot count it as wave 4 in normal situation. Maybe because it was micro, we could be less picky, but I would rather wait for a bigger pullback in wave 4 and then the very final push high in a micro wave 5, and that push down would create a very important support at the level made by that microwave fall down, and I would be expecting violation of that law, and the violation of that law would indicate for me completion of the whole rally in wave 3 of a larger degree here. And the very same story about AS mini, so it was NQ mini and this is AS mini. We also focus on that very final 5-wave up microstructure, which is subwave C of wave 5 of a lower degree, which itself is about to complete wave 3 of a higher degree. So when we switch to a lower time frame, we can use that lower time frame to confirm completion of a wave on a higher time frame. And on that chart of ES mini chart, I've shown you several support levels. Normally, when a rally gets completed, the first main target becomes to retest wave 4 of a lower degree. And this is wave 4 of a lower degree, which was made around 3070. But before that, it may find some support around 3120, 3130, somewhere here. I would use that box as a demand box for the first move down. And here we have the same problem. One could say it was ABC of 1, shallow 2, A of 3, B of 3, C of 3. The problem is that C of 3 is equal to A of 3, and normally C of 3 tends to be longer. So that is why I would suggest to wait until the first pullback down, use it as a critical support for the whole fractal, for the whole rally, and then wait for the final push higher. And once that critical support is violated, then that would be a solid sign that the bull got tired. This is the micro structure we need for down and the final 5 up. And look at the 5-wave up fractal. It has one great feature that is of great help for any trader. You can see that any 5-wave up fractal is just a sequence of higher lows, and every time we complete a pullback ABC of 2, that becomes our new higher stop over the previous stop, over the initial stop at the beginning of that fractal, at the starting point of wave 1 up. Once price completes the following corrective wave in a subwave B down of wave 3 up, we start to use that low as our new higher critical stop for the whole fractal. And when wave 4 gets completed, that should complete making a new higher low over the previous low. That becomes our critical stop for our long position. And finally, we get that final push A up, B down, C up, and that B down becomes our final stop. So at this point, once price violates that level, that's like a very deep first cut to the spine of the bull market. Even a deep cut cannot stop a raging bull. But once bull gets that deep cut, it starts to bleed in big time. This is when you can start counting time until bulls will die. Let me show you what I mean. You can see here a sequence of higher stops, and that is the point when the bull gets its very first deep cut. This is when the bull starts bleeding. When you keep seeing uninterrupted sequence of high lows, it's not reasonable to short that rally because bull is super strong. You really have to wait until the bull gets very first cut and it starts bleeding. When it starts bleeding, it does not mean that the bull will collapse right away. What normally happens, that first cut happens at the first leg down, on a shallow leg down of subwave A of wave 4 down. And then we get an ugly corrective structure, structured as micro A up, B down, and C up, and that ABC becomes a corrective subwave B up, and that subwave B up may push price back up to the very top made by the previous rally in wave 3 up, It can even push price a bit higher under the expanded flat structure. So you are not going to miss the move down, because the real meaty move down comes in the final subwave C of wave 4. After the first A down makes that cut, bull starts bleeding, then we get a corrective B up. It's a corrective wave, but it points in direction of the main trend, because the wave 4 down is just a temporary pullback, and we're gonna be wave 5 up. So at this point, all that pullback is just a temporary pullback. It requires another push higher. Even after that pullback, the bull on a bigger time frame is still alive and strong. So that's why that corrective subwave B up will push price back up to the top or even higher, or at least it may retrace 76.4% of that first leg down, or 61.8% of the first leg down. So you should not be worried about missing that move down. Now I'm going to tell you about my Christmas offers. Again, you can find them at www.castawadetrader.com/Christmas. Now it's a great time to take my Christmas offer because it gives you a super long 60-day trial period. That 60-day trial period would cover a very important period in the market. I believe that we're gonna get that corrective ABC structure down in January, February 2020. I believe that that corrective stage would create a lot of opportunities for traders. I think that my service would help you to navigate that important and volatile period in the market. So what I offer to you is that a full access to the coverage of all 4 markets on my chart for only $99.99. The regular monthly price is $99.99 for only 2 markets, and normally I would ask you to pay $24.99 for every additional market. So if you're gonna get a coverage of all 4 markets on a regular basis, I would ask you to pay $149. But because this is a Christmas promo, you pay $99.99 for 60-day access to all charts about all the markets I post on my website. After that 60-day trial period expires, you will be charged a reduced monthly rate. Again, go to www.castawadetrader.com/Christmas and read details of that promo. During that 60-day trial, you will get coverage of US stock indices, natural gas and crude oil, and gold, gold miners, and silver. Before I finish this video, I want to show you my last update on ES Mini I posted on Friday. If you subscribe to updates on my charts, you have several sections for each market, and if you are subscribed to the coverage of US stock indices, so this is how you will see snapshots of previous updates. You click it and you see the very last update. And I want to show you couple of charts. So this is ES Mini 240-minute chart, and I want to show you 2 very important extensions which form a very dense cluster. So you can click in and you will zoom in the chart. You can see that ES Mini is about to hit very important dense cluster of FIBs. If you measure wave 1 up from the bottom of wave 2 down, 250% extension, which is very typical for wave 3 up, is 3,235. Let's scroll down, and there is another extension I want to show you. If you measure the first leg of wave 3 up, subwave A of 3, and you project it from the bottom of B of 3, you're gonna get 3,231. Those 2 FIBs, 3,235 and 3,235, form a very dense cluster. That cluster of FIBs, you can see on this chart, one of them 3,231 and another was 3,235, may create strong resistance for that rally, which would at least produce a minor pullback in minor wave 4 down. Remember, we need to get that 4 down, which would become our critical support, which would be watching for violation. That would be our first deep cut of that raging bull. This is where that bull may start bleeding. The majority of my subscribers actually prefer my premium trading chart over regular updates on my website. In my trading chart, you can directly talk to me, you can ask questions, you can ask me to count some chart. But what is really important that all the updates during the day are first posted on the premium chart, and only 5 to 10 minutes later they are reposted on my website, because it just takes time to post them on internet. In addition to that, I discuss different counts, I discuss different alternatives and trading opportunities. I post my own trades in my premium chart, and I do not post trades and I do not talk about trading signals on the website. So if you want to try that more sophisticated service, premium chart service, you can try it for $149.99. It's also a special super long trial period, 60-day trial period for a special price, because the regular rate for coverage of 2 markets is $49.99. You get coverage of all 4 markets for the basic rate of monthly basic rate of $149.99. You can subscribe at castawaytrader.com/account/premium trading chart. I will post all the links in description of this video. Thank you for your time, and I would really appreciate if you could subscribe to my YouTube channel. And that would mean a world to me if you could like this video. Thank you for your time and good luck with your trading.